Now we have one more question.
Sidelining us here.
I
I'll get some more water.
know
Go
what's
for it.
going on with gold. Yeah, I mean, I have some theories on what's going on with gold. Maybe two or three different important things. So number one, Dylan, I need you to share a screen. So there's been this Bank of International Settlements rule that or regulation regime that has been passed recently, or it's been decided on. I just wanted to trying to get the exact date. It seems to have been around June 2021. Okay, so 2020 maybe even. Let's see, what's the date? Let's see if we can find Basel III. So Basel III has made a has been a very important development for gold because um, because it has decided that gold is a tier one asset for banks now, which means that it's basically a risk free asset like treasury and cash. And it determines it has an impact on the risk ranking of the banks. So that is an impetus for banks to hold a little more gold, or maybe way more gold than they did before. And so that is one aspect of what the bigger movement of what's been going on with gold over the past couple of years. So you will notice that gold, I believe, for the first time, started uh, exceeding $2,000, around the COVID times, and then now during the Basel III Accords. I don't know the exact date, but it's been around this time that there's been a major push towards gold. Then another maybe related aspect is the amount of gold that central banks have been buying. I'm just trying to pull up global gold buying by central banks, the World Gold Council. Let's look at what they
Yeah,
say.
I got the World Gold Council here pulled up. I was like, oh, here's another fucking council, and I'm
Hmm.
looking at who's on it, and it consists of the World Gold Council's 32 members are some of the world's most forward-thinking gold mining companies. So they're all gold mining companies, and then it says the board of the World Gold Council has a fiduciary responsibility to all members in ensuring that the World Gold Council fulfills its mission and objectives. So basically, it's a bunch of gold miners who have a stated purpose of making sure gold miners make money.
Yeah,
Just to be clear.
yeah. So I'm gonna share this tab here. So central banks score a hat trick. This just came out a couple of days ago. Sorry, February. Central banks score a hat trick with demand topping 1,000 tons for the third year in a row. Central banks add over 1,000 tons to global gold reserves in 2024. The National Bank of Poland led the charge. Blah blah blah. I saw a chart
The
the other
point that you're
day.
making is that there are large worldwide systematic pulls for these institutions buying gold, which may be a reason why the price is going up. Am I getting that right?
Absolutely. Just trying to see if there's a visualization here. Yeah, so it seems to be here. Very high bars recently. I don't know if this is a recent chart, but 2022. It said 3 years in a row. Oh yeah, it's 2023. So this has been an ongoing trend. So um, my point being that uh, there has been a there have been big um, trends supporting gold buying, generating gold demand for secular trend, bigger trends for the past couple of years, which has definitely helped gold. Now, there's several other factors that come into play. We've talked about this on the show before. Uh, what is uh, what is good for gold? And it seems like um, it seems like real inflation is I call it real inflation. I'll explain in a second what I mean. Whenever real inflation goes high, that seems to be a pretty good trend for gold. And by real inflation, I mean the inflation rate minus the interest rate, minus the risk free interest rate. Because there may be times when you have very high inflation, but if the interest rates are so high that they counterbalance inflation or even eliminate the inflationary effect on people's cash holdings, then it's not a big impetus to buy gold. But when inflation is high and interest rates are low or expected to go low, then that is a good development for gold. Now, what do we have right now? We have a situation where I don't know if this trend is necessarily at play, but we have expected inflation, at least in the part of the market, because of the tariffs. And also, if you look at the price of eggs right now, I mean, there's some things out there that indicate that inflation is could possibly remain a little elevated. I don't know if I 100% subscribe to that, right? It could be that the market is wrong and the gold price comes back down and just. But also, what's happening is that the interest rate, the long-term interest rate, the 30-year rate, and the short-term rates, they've all hit a sort of ceiling at around 5%, 5.25%. And there's no more expectation that these rates will be going up much more. In fact, the expectation is that the Fed will cut rates over the coming years. The dispute is over how fast they will cut rates, and there's a minor possibility that maybe they'll raise if inflation pops up again. So all the bad news, like for example, 2022 was a very bad year for risk assets and also gold, because the central bank started hiking rates so aggressively and so unexpectedly. So that was bad for gold. All these effects are now priced in. So the only expectation for interest rates is now that they're going to be coming down. The expectation for inflation is that it's going to stay where it's at, or maybe even going to tick up a little more. Now, if we see sustained low inflation over the coming years, that's not going to be good for gold. Okay, so but at the moment, there's an expectation of some sort of inflationary level of maybe 3% that will be sustained. There's an expectation of interest rates that'll be coming down over the coming years. From right now, we're at around 4% or 4.25%. I don't know exactly where, but expectations that they'll be coming down. We don't know exactly what pace. That supports gold. We have the global central banks buying gold like crazy. We have Basel III, a long-term, big picture trend that incentivizes banks to buy gold. We've had years of gold being underestimated, not talked about. We had a show about this, Dylan. I think in 2022, I talked about. I think, and I said back then, I have really high expectations for gold because the rest of the world has such low expectations. And that got muted because right after we did that show, the interest rates started going up like crazy. That's
Mm.
over now, coming back down. Gold is hitting record highs as we speak. So that's what I think is going on with gold, and that it vindicates, the permanent portfolio and the strategy of having some gold in your portfolio, and it's helped my portfolio certainly do well. Actually, in fact, I may have to sell some gold soon and buy some cheap treasuries and short term and long term just to bring my portfolio back in balance.
Here's a question
Uh,
for you.
so, yes, do you know how they are do you know why they are doing the buying?
Oh,
Do you know why they're doing the buying? Well, I think it. I suspect it has to do to a large extent with the Basel III accords and the new regulatory treatment of gold.
I think his
On the one
question
hand,
is more toward if why would that be proposed in Basel III? What's the thinking of the power players in back saying why we want to propose this in Basel III in order to get central banks to start acquiring more gold?
I don't know honestly. I mean, it could be because the Basel. the type of thinking of the Basel approach, which is totally flawed in my opinion, is that banks need to have reserves. The soundness and the safeness of a bank is determined by how much like real assets they hold in their vaults as a backup in case shit hits the fan, which in our opinion is a flawed.
Right. Richard Werner has
Richard Byrne has talked
destroyed
about
that
this as
argument,
well.
basically.
Yeah,
Yes.
it's and also Minsky has talked about this decades ago, that this is tinkering around on the liability side of the bank's balance sheet, and what you need to focus on is the asset side of the bank. What is the quality of the loans made, right? And how do we ensure that banks are incentivized to make good loans and disincentivized from making bad loans? There's some principal agent problem. There's some incentive problem there with banks because they're public-private entities, public-private actors. So they occasionally have incentives to make bad loans and fill the coffers of their management and their shareholders temporarily. So that's the problem. Richard Werner said that London has manipulated the gold price with paper gold for decades. The central banks start to ask for physical count and repatriation. Dot dot dot. Then what? So,
I
I
think what he's saying is that if the central bank started to ask for a physical count and for the actual gold in their hands, then it may reduce the ability of other players to manipulate the gold price with paper.
yeah, I mean this. I don't. I have not heard Werner said this specifically. If you could send us that video, that would be great. Um, I don't subscribe to this gold is manipulated narrative very much because um, I can go to the gold store right now and sell gold at the current spot price or buy it at the current spot price plus a minor premium anywhere in the world. There's very decentralized. It's very unmanipulated in my opinion. Yes, there's paper gold for convenience reasons. There's always some paper gold out there. There's paper gold futures. Not everyone takes settlements on futures because futures, to some extent, serve as a insurance policy more than anything. So I I, I don't know. I mean, I don't think that the gold price is manipulated. I think it's a market, and there's market forces at play. And so, for example, I can tell you what prices are manipulated. I think the diamond prices are highly manipulated because as any divorcee may be aware, when they try to sell their diamond ring, they get sticker shocked by how little money they actually receive for because if you buy a diamond ring for about 1,000, let's say you're frugal man, which is smart, unlike myself maybe, although I consider myself frugal too. But you buy a diamond ring for $1,000, you probably have diamonds in there that are worth about $10 or so. So 10, $20. So the diamond market is highly manipulated. You pay way more for it than what you receive when you sell it. So that would be an example of a manipulated market. And the De Beers company is known to have been stockpiling tons and tons of commercial diamonds, and so those diamonds are manipulated. Now there are obviously diamonds that are highly valuable, very rare, that sell at auctions at Sotheby's, such as the pink diamonds or the rare black diamonds, the Sierra Leone diamonds. Not talking about those necessarily, but just as an example of a market that's pretty manipulated. I think the gold, also with the diamond market, you have the problem they're not as homogeneous as gold. They are rather difficult to price. You always need to have some bearded Jew with a magnifying glass sitting there whenever transactions are settled in diamonds. And so, I mean, it's talking about the movie cliche,
Right.
but it's not like gold where you put it on a scale, done deal. You know. For example, it has been said that China has fake gold bar filled with dice. I wouldn't be surprised. China's a fake gold bar. Um,
What's tungsten worth, by the way? Because my understanding is tungsten is actually a pretty valuable resource.
yeah, diamonds can be created artificially for sure.
Uh,
Gold too,
well, I guess
because
tungsten's measured by tons, so that probably that answers that. One thing I'd say about the gold and tungsten, I just looked up the relative densities, and yeah, gold and tungsten have a very very similar relative density. However, I feel like that if somebody actually had an accurate scale, you should be able to detect that
yeah,
difference.
no,
If
for
you're
sure, for sure.
giving gold bars, you should be weighing them.
Yeah. Diamonds can be created artificially. Yes. So, I mean, if you listen to any hermeticist worth his salt, Manly P. Hall will tell you that gold can also be created artificially. I'm just kidding, obviously. Um, yeah, gold is very hard to fake, basically, is the point. And it is an ancient metal. It may have some mysterious magical powers. We don't know, but it's associated
Or
with wealth.
assumed magical powers. Yes,
Yeah,
even
like
though we don't
Robert
have our powers.
Kiyosaki. Robert Kiyosaki, for example, he says that he's he makes a lot of money because he has a lot of gold. So he thinks the more gold you have, the more money will just come to you. Maybe there's some truth to that. Honestly, I think there's having a lot of gold in your portfolio helps you act rationally and calmly in times of turmoil. So maybe there's something to that. It also goes up a lot in value, and then you can buy up cheap assets if you have a balanced portfolio, permanent portfolio type of approach. So maybe,
Especially if there's a crash and you're ready and waiting, right, to buy everything up on pennies on the dollar. Everyone, please like, comment, and subscribe to help us grow this channel. I think we cover a lot of good stuff. We're covering ideas that you're not hearing anywhere else. Economic ideas, historical ideas, systematic politics ideas you're not hearing anywhere else.